The Shriram Group's massive corporate overhaul. You heard it right here on ET Now, how it's going to pan out. It's exactly the way it happened with two listed entities coming together. Taking you through all the details, why this merger is good, will simplify the group, the road ahead, what it means for the NBFCs, the collection business, and a lot more. Here is the top management in conversation with my colleague Ajay Sharma. He's, of course, the first one who reported on the corporate overhaul.
We have been working on this for quite a long time, and finally we have come out with a swap ratio of 1:1.55 to HDFC shareholders. The idea behind this is building synergy between all the group companies. We have Shriram Finance, which is having a large number of customers. Most of their loans are small ticket size and lesser tenor, and but having a huge customer base, that is going to be a potential aspirational class new customers for the group for selling other products. We believe that is going to be first advantage. And the second advantage is large customer base also gives scope for us big data, data mining, and also building analytical to give products which suits to the customer's need and also customize new products. So this we feel is big advantages for the Shriram Group, and we should also be able to sell our insurance product across all the group companies, and that again is the another advantage. So combined, we feel there is a positive bottom line impact with the merger of two companies, and we estimate the incremental bottom line growth would be around 10% for the merged entity.
Right. Mr. Revankar, can you help us explain, one of the things which everybody is talking about, that the key people, duplication of roles. If you can explain what are the top 5-7 roles, and in the three entities, what will happen to the remaining of the duplication of roles?
See, basically there is no duplication as such. If you look at the three verticals of insurance business, lending, and the both insurance, life, general, and lending business, each one of them are managed by the senior team, and all these entities have a vice chairman role plus a managing director role, wherein managing director is running the business on day-to-day basis. The vice chairman's role would be more long-term vision and building strategy, and that's where and bringing in synergy in the group. That's the role of vice chairman. So there's a clearly defined role for all the senior leadership, and as you know, most of the senior leadership team in Shriram are partners in the Shriram Ownership Trust. So everybody will be working towards the advantages for the Shriram customers, employees, and stakeholders.
Right. So can you explain to us, this is the largest retail NBFC, as you had said in your presentation as well. What are the kind of growth opportunities this combined entity would be eyeing over the next couple of quarters and years?
See, what we feel is that there is always an unmet demand among unbanked and underbanked segment. Many of our customers would be needing an additional product, and being focused on only few products, sometimes we may miss customers other requirements, and then ultimately if you are not able to retain customers, customer would be moving to the competition. That's how typically happens, which we would like to see that every customers of ours gets all different kind of different products and services that he expects, and that will help us to retain the customer and also our ability to reach out to customer digitally also would help us to meet the need of new to credit kind of a customers. So there are many customers we feel new to credit, and we should be able to meet their requirement also. So we believe as a combined entity, we should be able to grow our book by minimum 10% annually, and the synergy benefit that comes out of the merger would be additional or incremental 10%.
Right, that's a very good input you've given. 10% loan book growth you're eyeing, plus incremental 10% profitability boost due to the merger. Would you also be considering or be keen to look at applying for a banking license or a banking opportunity going forward? Would that interest the new entity as well?
As of now, we have no plans. We have not really looked at this opportunity of becoming a bank. But going forward, we need to really look at the environment and the kind of guidelines that is there for the banking, and then we will look at it. So as of now, we don't have any plans.
Mr. Revankar, you had briefly touched upon that role of technology or the super app which you're aiming at. What kind of cross-selling or product would be offered via that, all your entire bouquet, or would you also look at tie-ups? Are you building that technology platform yourself internally, or would you be acquiring some fintechs, or what's the game plan there?
We have been building all the technology and the digital requirement internally all these days, and we'll continue to do that. Recently, we have hired some specialists from the market to really strengthen our aspiration. And what we feel is that going forward, as the customer have become more digitally aware and his digital experience becomes better, more and more services would be offered to the customer. As of now, many of our customers need some kind of assistance as far as digital operation is concerned. And over the period, we feel that most of the product would be do-it-yourself kind of a product. So once we reach that kind of a level, then probably we'll be able to scale it much better. So our digital plan is to provide a better service. And
okay, that's the word coming in from Mr. Umesh Revankar talking about the restructuring at the Shriram Group.